Amazon's earning calls were disappointing, announced yesterday at 5 p.m., and the stock bell had just closed. After hours trading dropped Amazon stock more than 15%, 20% loss on the day. You can see that right here. And the reason I'm covering that on today's episode is because some of the things that happened on that earnings call in combination with what else I'm seeing are going to be pretty good indications of what it's going to be like as an Amazon seller here in the next year. So earlier this week, I broke news that we had the restock limits completely collapse. It's actually gotten worse since my video on Tuesday. For example, on Saturday, I had restock limits of 50,000 units. Monday, that was 20,000, and yesterday it was 15,000. So the amount of stock you can send into Amazon right now is at an egregious decline. And I think that this is kind of related to some of the things we're going to hear about in the report coming out of Amazon yesterday. In addition to that, another large economic factor that I think is going to hit everybody somewhat by surprise is the risk that the U.S. is going to run out of diesel fuel here in the next couple of weeks. And in addition to that, there's talks of a railroad boycott. So we've got a lot of infrastructure issues right now. And so if the reason restock limits were pulled back is that Amazon may think that they won't have enough fuel to ship everything, that would make sense. I had speculated on Tuesday, I just simply thought they didn't have enough staff. That also makes sense. Could be a combination of both of these things. But let's dive into the Amazon's earning call, and I'll let you know what they talked about. The first big piece of news is that Amazon advertising grew more than 25% to just under $10 billion, which means more people are advertising, and this is trending upwards. Not like Google or Facebook, which posted losses. We saw Facebook and Meta stock completely tank. We know that the Zuck has lost a lot on Meta and pretty much produced nothing for it. Hiring. Now, this one is surprising because if you're understaffed, which I think they are at Amazon, why would you be pausing hiring? But that's exactly what Amazon is doing in certain parts of its business and winding down products and services. However, on the earnings call, they didn't specify which ones, which means they may not be as hiring as many workers for Q4 as usual. So Amazon, as most of you know, trends 3x up during Q4. They charge more for FBA fees during Q4, and it's just a busy time. So a company like that usually has to hire up like 100,000 people. Well, another article I read said that Amazon lost 2/3 of their new hires in the last year. This was not on the earnings call, but when you put those two together, man, it's a bleak outcome. Amazon's half the economy after all is said and done. All right, Amazon.com, they didn't give numbers. However, they did not expect online sales to grow this season, so they're signaling. Adobe said they would expect only a 2.5% year-over-year sales growth for kind of some counter measures or comparison. Third-party sellers and the products that they offer remain an important strength offering for consumers, representing 58% of total paid units sold in Q3. So that's helpful information for us to know and understand, because if Amazon is trying to kill Vendor Central, which I'm pretty sure they are, but it's kind of been a slow death, then we know that 3P is increasingly important. Also, if Amazon is starting to kill some of their own personal private label brands, they'll probably keep some of the good ones like the batteries and Amazon Basics, but they're going to probably kill off like half of the ones that you may not even have heard of in categories you may not even know they have a private label brand in. Those kinds of things I expect them to kill here in the next 2 years. Not necessarily for economic reasons, but definitely driven by that. But probably more so for the fact that they have regulatory issues right now, right? So They're very concerned about the way that they are perceived as this giant monopoly. And I think that they need a sacrificial lamb of sorts. And I think they're going to give up some of those private lambs to make that happen. The CFO said this: the continuing impact of broad-scale inflation. By the way, government says inflation is 8.5%. We know that's a blatant lie. If you look at grocery bills, they're up 60% in the last 2 years. Look at oil, it's up like 200%. So we know that inflation is closer to 33%, all things said and done. I do not believe inflation is easing. I think it's going to get worse in the next year. But the CFO said the continuing impacts of broad-scale inflation, heightened fuel prices, rising energy costs, and have impacted our sales growth as consumers assess their purchasing power and organizations of all sizes evaluate their technology and advertising spend. So think about that. You got a guy who's telling the truth, at least in that soundbite, if not the complete truth, at least a partial truth of what they're experiencing. And we know that the families who live in the United States have all had a very rough year, if not two. So with all of this said and done, I am very positive about Amazon, but I'm also a realist. Blockbuster, Kodak, many of these other big companies that nobody thought could ever fail, failed and did so very rapidly. I don't believe Amazon will fail, but I do believe they are extremely vulnerable right now. And knowing where they're vulnerable helps you as an Amazon seller navigate what to do about it, right? You probably need to have a little bit more control of your inventory than ever before. And I've been saying this for several years now. If you don't have a warehouse, if you don't have a 3PL, you are at the mercy when restock limits come around the corner like this, all of a sudden, unannounced. Amazon still hasn't made a public statement a week later. Blows my mind. They're very untransparent, mostly because the right-handed Amazon doesn't have a clue what the left hand is doing over there. And that's kind of intentionally made by design. So there's a lot of uncertainty right now. And if you can't ship your stuff into Amazon, it kind of makes it hard to sell it. So that's why you need to have inventory control. I've also been on the record saying multiple times over the last 2 years that you need to buy a year's worth of supplies and inventory. And my thesis was if inflation is as high as I say it is, and I'm pretty certain I'm being proven correct on this, then you're buying it on discount. And if you're buying it on discount, that means you're basically hedging against the inflation by just possessing it. So those are reasons I think you should have a high inventory position. Having said that, that's financially burdensome. It makes it very difficult to have dollars tied up in inventory. So if you don't have the capital, obviously that's not going to work for you. But if you do, it behooves you to make these financial investments because you can't exactly dump that cash into the stock market right now. That would be a losing bet. It would be way better to invest it into your business. Additionally, buying a failing business right now makes a lot of sense. So those businesses that have run themselves aground where they didn't have fiscal responsibility will go under. And those that have higher cash positions right now will be able to come in and purchase these failing businesses and brands. And so a lot of good, savvy business owners salivate when recessions hit because they know that that's opportunity knocking. So this is an opportunity when all of the aggregators are done buying businesses and they have completely failed. I've got a bunch of videos about aggravators. They kind of were aggravators, weren't they? Aggregators coming in and messing up the Amazon ecosystem. So check those out next. But because they're not buying, you have a higher buying power right now. EBITDAs are going down, which means it's not a good idea to sell right now. So it means you have to be a stalwart of your situation and you have to take control of your situation and beef up. And that might mean hire a consultant. Yours truly is waiting here. myamazonguy.com/coaching. And you could bring me in and I'll basically evaluate your business and tell you what to focus on, what priorities to make. Some of the biggest mistakes I see businesses do is they get paralyzed. They don't make decisions. And sometimes they're looking at too much data. In other instances, they're not looking at data at all. And sometimes you need an outside perspective just to come in and in like 5 minutes, an outsider can really nail it sometimes. Now, there's obviously a lot of context behind the scenes and relationships and politics at bigger organizations. But by and large, sometimes just looking at the listings and saying, you know, this needs to be tweaked. You need to do this. You need to spend more on ads. You're not investing in ads enough. Here's the data that shows this. Your indexing is too low. Your ranking isn't mature enough. You're not building out the right designs. You're missing brand stories. You don't have A+ content at the premium level. You're not linking to your other products in the product grid. There's all kinds of things that you can do right now and focus and prioritize. And just knowing where to focus will help you. So that's kind of my overview of the earnings call. Definitely depressing news overall. Increasing costs, you know, so if we want to say, you know, inflation's in that 25% range and PPC costs are up 25%, kind of link that together as well. So keep those things in mind. Let me know which crazy thing you agreed the most with in the comment section, or tell me which thing you disagreed with the most. I would love to hear your perspectives. I'm very opinionated and love to talk about the Amazon news. My name is Stephen Pope. I'm the founder of My Amazon Guy. We'll see you soon.